Buckle up, everyone. We're diving deep into Indian auto parts today.
Ooh, sounds interesting.
It is, especially if you're following the electric vehicle space at all.
Yeah, definitely on topic these days.
Absolutely. And that's where Motherson Sumi Wiring India Limited comes in.
MSWL, right.
Yep, MSW Well for short. They just released their quarterly report, and we're going to break it down.
Should be insightful. They're a major player in the wiring harness game.
Exactly. They're like the nervous system of all these vehicles coming out of India.
Supplying to the biggest names. Maruti Suzuki, Mahindra, Tata Motors, you name it.
I'm really curious to see how they're positioning themselves for this EV boom.
Well, their financials are a good place to start.
Yeah, let's get into the numbers. What are we seeing in terms of growth?
They're reporting a 9% year-on-year revenue growth, which hit 2,300 crores this past quarter.
Not bad at all, especially when you consider the overall passenger vehicle industry only grew by 3%.
Right, so they're outperforming the market, which is a good sign.
On the surface, it looks like they're in a great position.
They are. They've got a smart product mix, and they're increasing what's called content per vehicle.
Content per vehicle, what's that all about?
Basically, they're not just selling more, they're selling more valuable stuff.
Makes sense. So higher end components, more features, that sort of thing.
Exactly. Likely tied into that whole premiumization trend we're seeing in India.
Consumers wanting more bells and whistles.
Yep. And IM as well is there to deliver those bells and whistles.
But, 9% growth, while good, is actually slower than their past performance.
That's an interesting point. I hadn't noticed that.
Makes you wonder if there's something more going on.
Well, they are making some pretty big investments right now.
Yeah, those new manufacturing plants, they're going all in.
3 new greenfield plants. That's huge.
And we're not talking small potatoes here. These plants are expected to bring in an additional 2,100 crores in revenue annually.
Once they're fully operational, of course.
Right, but that's a long game. What about the short-term impact on their financials?
You're thinking about those expansion costs.
Exactly. Gotta hurt their profitability in the short term.
Well, those startup costs are definitely cutting into their EBITDA right now.
EBITDA, for those of us who don't speak finance.
It basically measures their operating profit, how much they're making from their core business activities.
So less profit for now while they build for the future.
That's the trade-off. But they're anticipating those costs to stabilize once the plants are up and running.
And it's not like they're just randomly throwing money at these plants.
You're referring to their locations, aren't you?
Yeah, they're strategically building these plants near their key customers.
Maruti Suzuki, Mahindra, Tata Motors, all within easy reach.
Makes sense from a logistics standpoint, streamline that supply chain.
Absolutely. But it's more than that. It shows a deep commitment to those partnerships.
More than just a supplier-customer relationship.
Exactly. They're working hand in hand.
And these aren't just any new car models rolling out. We're talking brand new platforms.
Which require more complex wiring systems, more content per vehicle, remember.
So they're betting big on their customer success as well as their own.
They are. It's a symbiotic relationship.
Makes you wonder how much say the car manufacturers have in all this.
Well, it's interesting. MSWL mentioned they're in talks with their customers to share some of these expansion costs.
Wait, what? That's pretty unusual, isn't it?
It is. Not something you see every day in this industry.
I mean, it makes sense, kind of spreads the risk, but it's still surprising.
It really highlights the level of trust and collaboration they've built.
These major car manufacturers wouldn't be sharing the burden if they didn't have confidence in MSWL.
Exactly. It's a vote of confidence.
Okay, so we've got ambitious expansion plans, strong customer relationships, and a potential slowdown in growth. Anything else we should factor in at this stage?
Well, for all this spending, MSWL is still a debt-free company.
Wow, that's impressive, especially in such a capital-intensive industry.
It speaks to their conservative financial approach, which is generally a good thing.
But could it also be a sign that they're being a little too cautious in such a rapidly evolving market?
That's the question, isn't it? Are they missing out on opportunities by playing it safe?
Especially when you consider the risks they're facing, like those currency fluctuations.
The Indian rupee hasn't exactly been performing well against the US dollar lately.
And they still import some components. That's got to impact their bottom line.
You'd think so, but they've been proactive on that front.
How so? Did they say anything about hedging or something?
They actually have agreements in place with their customers to adjust pricing based on currency fluctuations.
So they're passing on some of that risk.
Exactly. Kind of a clever move.
But doesn't that put some strain on those customer relationships we were just talking about?
It's a calculated risk, for sure, but it seems to be working for them.
Okay, so maybe it's more of a delicate balancing act than a risky move.
That's a great way to put it. They're trying to find that sweet spot.
Protect their own interests while maintaining those crucial partnerships.
And that's a theme we'll be seeing again and again as we delve deeper into MSYL's strategy.
This is getting interesting. So far, we've got a company walking a tightrope between traditional vehicles and the EV revolution.
Juggling strong customer relationships and a fiscally conservative approach.
What's next on our agenda? So these greenfield plants, the ones being built from scratch, what kind of scale are we talking about?
Pretty massive, actually.
Oh, yeah.
Yeah, each plant is going to employ somewhere between 2,000 and 2,500 people.
Wow. That's a lot of jobs. Must be some pretty big facilities.
Oh yeah, mega factories for sure.
Makes you wonder how much these things are costing them.
They did mention some figures in the investor call.
Let's hear. What are we talking about? Ballpark.
Well, the CapEx, so
Hmm.
capital expenditure, for each plant is estimated at 40 to 60 crores
Whoa, that's for each one.
for each one, and that's just equipment and machinery.
Right, because the land and buildings are being taken care of by their parent company, Samel.
Exactly. So you're looking at what? Roughly 150 to 180 crores for all three plants?
Not chump change, that's for sure. That's a serious investment.
Serious commitment, too, especially to this whole EV thing.
Yeah, that's what I'm really curious about, how this all ties into their EV strategy.
It's definitely a gamble, no doubt about it.
I mean, the EV market in India is still so unpredictable, right?
Totally. Infrastructure's still developing, battery tech is evolving. Who knows what consumers will actually go for?
Makes you wonder if they shouldn't be allocating even more resources to EVs, especially with the government pushing so hard.
I see your point. There's definitely that tension.
But, they are kind of playing both sides, right?
How so?
These plants, they're going to make wiring harnesses for both electric and traditional vehicles.
Oh, right. Hedging their bets.
Smart move, I think, at least in this transition phase.
Makes sense. Got to keep one foot in each world until things settle down.
Nobody knows how quickly this whole EV thing is really going to take off.
True, true. Makes you wonder what their EV revenue actually looks like right now.
Yeah, do we know? Did they break that out at all?
I think so. Let me see. Pankaj Mittal, he's the COO of Samel.
Right.
He said EV revenue is about 3–4% of Emboil's total revenue right now.
So it's still pretty small.
Small, but with huge growth potential. Once these plants are at full capacity, that percentage is going to jump, like way up.
Especially since they're really pushing to localize production of those key EV components.
High voltage wiring harnesses, connectors, all that stuff.
Yeah, I'm really interested in this whole localization thing.
Me too. It's a smart move on multiple levels.
Like we talked about before with the currency fluctuations.
Yeah, sourcing things locally reduces their exposure to global market volatility.
Plus, it plays right into that Make in India initiative. Good PR all around.
Two birds, one stone, for sure.
But localization does come with its own set of challenges. Right?
Oh yeah, absolutely.
Like what?
Building up those local supplier networks, making sure the quality's there, that's not easy.
Right, you got to trust that your local partners can deliver the goods.
And on time and within budget.
A big risk makes you wonder if they're biting off more than they can chew.
Maybe, but remember, Emboil isn't exactly flying solo here.
You're talking about the joint venture thing, right?
Yeah, Samvarhana Motherson International Limited, big Indian company, and Sumitomo Wiring Systems, Japanese powerhouse in the auto industry.
So they've got some serious backing.
Serious expertise, too, a proven track record.
So that should give them some leverage in navigating these complexities.
Hopefully, it'll be interesting to see how this whole localization strategy plays out.
Long game. Got to keep our eyes on that. Okay, so we've dug deep into MSWell's financials, expansion plans, their EV play, all that.
But before we get too focused on one company,
Yeah, got to zoom out a bit.
what's this all telling us about the Indian auto industry as a whole?
Right. Bigger picture.
Well, we did mention earlier that the overall passenger vehicle industry grew by, like, what was it, 3% year on year?
Modest growth, for sure.
Not bad, but definitely not the explosive growth we've seen in the past.
So the market's maturing a bit.
I think that's a fair assessment.
Is that a red flag? Or just kind of how things go?
Probably more of a natural progression. The Indian auto market has been on a tear for like a decade.
Yeah, rising incomes, urbanization, all that.
But that kind of crazy growth can't last forever. Something's got to give.
Like any growth spurt, eventually you hit a plateau.
Doesn't mean things are stagnating, though.
Just transitioning to a more sustainable pace.
Exactly. And within that evolution, you've got new trends emerging, exciting stuff, especially in the EV space.
It's like the Wild West out there, but with electric vehicles.
And MWIL seems to be staking its claim.
Totally. They're right in the thick of it.
But, like any gold rush, there can be winners and losers.
Okay, that's what I want to understand better. We've laid out the landscape. We've got the key players, the major trends. Now what?
Now we got to get into the nitty-gritty, the challenges and opportunities.
Specifically for MSWell.
Right. Let's put on our analyst hats and dissect those, shall we?
Game on! What's jumping out at you?
Well, one thing that immediately comes to mind is the potential impact of government policies.
Oh, yeah, the whole EV push.
Exactly. Subsidies, tax breaks, all sorts of incentives designed to get people to switch to EVs.
Which is great for generating excitement around EVs, but could also create some volatility, right?
Absolutely. Government policies can change. Sometimes overnight, it's a risk.
So MSWIL needs to be adaptable, can't get too reliant on any one particular policy.
Exactly. They got to be prepared for those shifts in the landscape, have a plan B, maybe even a plan C.
Always good to have a backup plan. What else are they up against?
Competition. That's a big one. We talked about the new players entering the EV market.
Right, but there's also those established automakers, the big boys. They're not going to sit this one out.
Exactly. They're all making their own push into EVs with their deep pockets and global reach.
How can a company like MSWIL even compete with that?
It's a classic David and Goliath scenario.
Underdog story, I love those.
But remember, MSWIL has its own strengths. Deep understanding of the Indian market, strong relationships with local manufacturers, proven track record.
And that whole focus on localization could give them a cost advantage over some of those global giants.
That's right, but they can't just rest on their laurels.
Got to keep pushing, got to innovate.
Exactly. Differentiate themselves from the competition. That's key.
So it's a balancing act, agility, adaptability, and a constant drive to innovate.
That's the game plan in today's automotive industry.
Starting to see the road ahead for MWIL. It's not going to be easy, that's for sure.
Bumpy ride, for sure.
But they seem to have a good vehicle, an experienced driver, and a clear sense of direction.
They're definitely a company to keep an eye on.
Speaking of keeping an eye on things, there's one crucial aspect we haven't really dug into yet.
What's that?
MSWIL's relationships with their customers.
Yes, the customer dynamics, always a crucial piece of the puzzle.
And that's what we'll be exploring in the final part of our deep dive, so stay tuned.
Welcome back, everybody, for the final stretch of our deep dive into MSWIL. We've covered a lot of ground, their financials, expansion plans, the whole EV situation.
And the broader industry trends. Can't forget those. Right. But now I want to focus on something we haven't really explored yet.
What's that?
MSWIL's relationships with their customers.
Oh, yeah, that's a big one, especially in this industry.
I mean, in the auto world, it's not just about making a great product, right?
Absolutely not. It's about those partnerships, those long-term collaborations.
So what makes these relationships so unique? Why are we singling them out?
Well, everything we've seen so far suggests MSWIL has built a very collaborative model.
Collaborative, how so?
It's not just a simple transaction. Here's the product, pay the invoice kind of thing.
So it's more like working together side by side.
Exactly. They're in it together, and there are some pretty clear indicators of this.
Okay, like what? Give me some examples.
Well, think about those new greenfield plants. They didn't just pick those locations randomly.
True, they're building those plants near their major customers.
Maruti Suzuki, Mahindra, Tata Motors, all within close proximity.
And they emphasized that it was more than just about logistics, right?
Oh, absolutely. It's about strengthening those relationships, being closer to their partners.
So they're not just suppliers, they're like strategic allies.
Exactly, working together to develop new products, new solutions for a rapidly changing market.
Okay, I'm starting to see the collaborative angle here, but what else points to this? Like concrete examples.
Remember when they mentioned they're in talks with their customers to share the costs of those expansions?
Yeah, that really surprised me. It's not every day you see a supplier asking their customer to help pay for growth.
Pretty unusual, right? But it speaks volumes about the level of trust and mutual respect they have.
So the car manufacturers are basically saying, hey, we believe in you. We're willing to invest in your success.
Because they know that a stronger MSWIL ultimately benefits them as well.
It's a win-win, and it's not just about the expansion costs, right? There was that whole thing about currency fluctuations, too.
Oh, yeah, they have those agreements in place to adjust pricing based on how the rupee is doing.
So they're sharing that risk with their customers.
Yep, spreading the burden, so to speak.
You'd think that would cause some tension, but it seems to be handled pretty smoothly.
Transparency and fairness, that's what they've built into their system.
This is really interesting. It seems like MWIL is more than just another cog in the machine.
Oh, yeah. They're a key player, a vital partner, helping these manufacturers navigate this crazy industry.
And that close collaboration, that's got to be a huge advantage, especially with all the disruption happening right now.
Reminds me of the Japanese Keiretsu system, where companies are interlinked, working together for mutual benefit.
Interesting comparison makes you wonder if this kind of ecosystem is the key to success for the whole Indian auto industry.
It's a thought-provoking idea, right? Maybe it's not just about individual companies competing, but about creating a network, a web of partnerships that lifts everyone up.
That's a really powerful insight, highlights the importance of relationships, trust, and working towards a common goal.
Couldn't have said it better myself.
Well, folks, that brings us to the end of our deep dive into MSWILE. We've explored their financials, their expansion plans, their EV play, the broader industry trends, and of course, those crucial customer relationships.
Phew, we covered a lot of ground.
We did, but hopefully you've all gained a deeper understanding of not just MSWILE as a company, but also what's driving the Indian auto industry as a whole.
A lot of moving parts, a lot of exciting developments, definitely an industry to keep an eye on.
And with that, we'll wrap up this episode of The Deep Dive. Thanks for joining us.
Always a pleasure.
We encourage you to keep exploring, keep questioning, and keep those conversations going. See you next time.